Hello friends and welcome to my YouTube channel Simply Stocks, and today I am going to talk about Butterfly Gandhimati, a potential mid cap which is a small cap at the moment at under 3000 crore market cap, why it can be big over the next 3-4 years. We'll discuss in detail about the business and the business segments. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I am not in favor or against any company that I talk about. Before I talk about Butterfly Gandhimati, here a small request: just kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on YouTube or Patreon, you can directly email me and you can get the WhatsApp membership as well. Now about the company. Established in 1986, Butterfly Gandhimati manufactures LPG stoves, mixer grinders, tabletop wet grinders, and stainless steel and aluminium pressure cookers, among others, and have 25% market share. It is a market leader for SSLPG stoves and tabletop wet grinders and have presence across India, and they also exports to other countries abroad. Major supplier of mixer grinders and pressure cookers. Basically, they supply mixer grinders and pressure cookers abroad as well as here in India, and the market cap of the company is close to 2800 crores. If you look at the numbers, these are FY23, these are June quarter numbers which recently came about. So sales went up by 85% to 254 crores, and the company wasn't doing well on the sales front for the last 4 or 5 quarters, but now things are coming back into picture with 85% growth in sales. Profit has gone up to 13 crores from merely 1 crore, so company is producing very decent profitability. It is a zero debt company. There's low promoter but high institutional holding here at 40%, which gives a lot of confidence. ROE of around 17% is decent. Margins at 10% is not that great, but at least the margins have come back into profitability or in positives compared to what the margins remained earlier, which was negative, and the company wasn't doing well on the operating profit margins front. If you look at the results at a glance, margins were up 500 basis points year on year and up substantially quarter on quarter, did extremely well, and there were losses earlier, but now things are looking pretty good. The margins are 200 basis points higher than June 2019, which shows you how well the company has done in comparison to what it used to do between 2016 to 19 or just before the pandemic. So things are coming back into shape, and it is doing much better than what it used to do before the pandemic. Sales growth of over 50% from FY19 is commendable, and the company has done exceedingly well to show this type of growth and the kind of performance it has done in a very competitive environment. And the company has come back into profitability. As I explained that earlier, they were producing losses, and that's why the stock was tumbling down and wasn't doing that well. Now, a big thing or a corporate development that has taken place over the last 1 year in this company is that Crompton Greaves Consumer Products. Crompton Consumer Products have bought into the business, and this has propelled the stock even higher because they have bought into the business at around 1350 1400 rupees. That was the buy price at which 70% of the stocks shared hands and 30% was a cash buyback. And now new promoter group to bring in operational efficiency and expanded business going forward. So what happened was Crompton Greaves Consumer bought something like 55% of the business through this deal, and then through an open offer they bought 26% more to have 81% stake into the company. and that has changed the complete picture of the company altogether. And the stock was trading at 1300, 1400, and has gone up from there, but has you can say corrected from the very top, so at very decent levels, with Crompton itself buying into the company at 1400 rupees. It looks pretty well poised for more up move going forward. Demand should come back in this festive season after a 3 year hiatus. You would agree that the last 3 years, FY 20, 21, and 22, hasn't been that great. Before 2020, the problem was plenty about the growth and disposable income that people were having, and post the pandemic, things got even worse. But I think from this festive season onwards, October to March, things should come back into focus, and we are seeing a precursor of that with the kind of June quarter numbers most of the consumer companies are showing. And Butterfly Gandhi Mate is no different. The way they have produced the numbers, I believe, are set to improve even further. And promoter stake has also increased to, I think, around 80-81%, and that is also a big positive over the last 1 year, as I explained, with open offer, etc. I think if the promoter have bought into the company at 1350, 1400, there has to be pretty much a big chance that the stock could perform extremely well over the next 2-3 years. So if you look at the revenue picture, then this is how things have panned out. In FY19, they had a revenue of around, these are all in crores. So 650 crores was the revenue in FY19. It has gone up to 1000 crores this year. So 60% jump in revenue over the last 3 years or so, and that has been consistent. So even in FY21, when things were not doing well, they had a revenue of around 862 crores. That is owing to a lot of sales that comes through from online businesses, and they do a lot of sales through online, you can say, sales. If you look at profits, and again see FY21, they had a profit of around 36 crores, owing mainly to cost efficiencies and offices being shut down. So what happened was online sales picked up dramatically, and they are into it big time with a lot of online chains and retailers. And so their products of stoves and gas products did extremely well. But even if you look at in FY22 compared to FY19, the growth has been 60% again. From around 10 crores, the profit has gone to around 16 crores. And it wasn't that great, probably say 5 years back, when things were looking down the barrel, and really company wasn't doing that well on operationally as well as on the net profit basis. They were into losses. So things have steadied itself, and now with Crompton coming into the picture, I think numbers should only improve going forward. Again, in terms of margins, they did 9% in that pandemic year, and because of it, their online sales, but it has dipped to 6%. But they have maintained the margin altogether over the last 3 years, and hopefully this should also pick up as we go along, and as things pick up on the ground with the festive season around. So this is the segment-wise distribution of the sales for the company. There are five verticals where the company sells its products, and the major sales comes from two divisions, 29% each, and they come from LPG stoves and mixer grinders. So Butterfly sells a lot of their mixer grinders and LPG in terms of their revenue front, but they have also gone into with 14% stake into pressure cookers. So there are pressure cookers that they sell as well. There's no there's no point that only Hawkins and Prestige sell, but Butterfly also sells its products, and in their total revenue, the total stake of the pressure cooker segment is around 14%, which is pretty decent. So as I explained in the segment wise breakup, so pressure cookers comprises 14% of the sales, 16% of their sales, which is also a pretty decent portion, comes from, sorry, pressure cooker. 14% of their sales comes from other appliances. There's different electrical appliances that Butterfly sells, like you have irons, so irons for clothing, etc., and many other products that they sell. But majorly LPG stoves and mixer grinders is where their focus has remained. If you look at some of the salient features for the company in terms of exports, etc., so 85 to 90% of our revenue comes from retail channels, which is pretty good. So not from, say, B2B, but especially B2C consumer segments. So on retail fronts, they do extremely well. Oil marketing channel contributes 10 to 15%. So basically HPCL, BPCL and other unit sells gas stoves, etc., for them on their you can say petrol pumps, and through HPCL, BPCL that they sell, and to HPCL, BPCL, the gas that we get, LPGs that we get at home, they have some business coming in from there as well. E-commerce platform contributes 40% of the sales, and that is where they did extremely well during the pandemic. Not to just dive under in terms of the business, that the company did well in terms of the sales at that point of time, and they are trying to, you can say, increase that footprint from 40%. So that will also augur well going forward because of the habits of people to buy online. So sales dependency on South India has reduced from 89% in FY17 to 76% now, reduced by around 13%, which is quite decent. Basically, Butterfly Gandhimati was located in terms of sales front in Tamil Nadu, Kerala, etc., and Andhra, but now they are beginning to have their footprints in Gujarat, Maharashtra, as well as some parts of North India as well. So dependency on South India is reducing, and probably in the next 3-4 years they'll reduce that even further, because Crompton Consumer Products or Crompton itself, because of the management coming in, they have a lot of business in you can say north, so they will expand into north. Plus Crompton coming into the business will have a better expansion in the south as well. So it will be a complete you can say expansion that could take place across India in terms of their business, and hopefully things should only pick up from here. Advertising expenses around 10% of the revenue, which is not that huge, which is stable, and right now it is present in 29 states with over 500 distributors, which is extremely good. That is the company is having pan India presence, and Crompton Greaves Consumer Electricals have taken over as lead promoter with 81% stake. That is a big positive for the company, because things will only look up. The management of Crompton Greaves has done extremely well for their business, and hopefully Butterfly Gandhimati should end up doing well over the next 3-4 years as well. And there has been a complete revamp of the top management. That is basically what has happened. It is not that through Crompton Greaves coming in that they'll sell a lot of electrical products. It's not that, but the whole top management of Butterfly has completely changed over the last 2-3 quarters, and now we'll see how things look, how numbers come in FY24. It will be very interesting to note that, because the management may take around 2 quarters to settle in. So hopefully from FY24 onwards numbers should look much better. So in terms of the valuations, if we look at the valuations, current EPS is around 9 rupees. For FY22, the EPS was around 9 rupees. That is basically because of the fact that 1 or 2 quarters were extremely dismal for the company. In FY23, we expect EPS to be better than 30 rupees. It came out with around 7.5 rupees EPS for the first quarter. I think it could easily emulate that over the next 4 quarters to have it around 30. I think more than 30. I think it should be closer to 32 rupees or so. Currently it is trading at 50 times FY23 earnings. If we look at FY24, then we should see more traction with everything opening up completely and more disposable income. I think the EPS should be closer to 42, 43 rupees. And if the stock trades at around 60 times earnings, we could see the stock easily around 2500, 2600 or so in the next couple of years. So if you get an opportunity to buy into the stock, say around you can say 13 1400, if that opportunity comes in, it would be a very decent buy for a target of 2500 over 2 years period. It could do extremely well. If you can hold on for 3 to 4 years, it could do even better because the numbers should do well till 2025 at least. So in my opinion, from a 3 year point of view, it's a buy at these levels. I think around 1500, it is a very good buy, keeping a stop loss at say 1200. So that's a 20% stop loss, but we could see 25, 2600 in 2 years time frame. Short term as well, it looks good with a 1300 stop loss. We could see 2000 on the stock pretty quickly. It has consolidated between 1300, 1500 for a while, for 4 or 5 months. So now things look good, and I think during the festive season, this could also end up performing pretty well. And allocate less than 10%, probably 5 to 6% only into such stocks. It's a small cap company, so be very careful doing that. Do your own analysis. But things look really good from the fundamental point of view for this company. So this was my video on Butterfly Gandhimati. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly subscribe to my Patreon network. Thanks a lot for watching.